Investing in UCITS ETFs. Hello everyone and welcome to this video about investing in UCITS ETFs. In this video, we will discuss what UCITS ETFs are, why they're so popular, and how they can be used to improve your investment portfolio. We will also look at statistical analysis and mathematical modeling of these ETFs to help you make informed decisions about your investments.
UCITS ETFs are exchange-traded funds that comply with the European Union's undertakings for collective investment in transferable securities, UCITS directive. This means that they meet certain regulatory requirements and can be sold to investors throughout the EU. UCITS ETFs can track a wide variety of indexes and asset classes, including stocks, bonds, and commodities.
Why are UCITS ETFs so popular? One reason for the popularity of UCITS ETFs is their low costs. These ETFs generally have lower expense ratios than actively managed funds, which can eat into your investment returns. In addition, UCITS ETFs offer diversification, as they can provide exposure to many different stocks, bonds, or other assets with just one investment.
How can you use UCITS ETFs in your portfolio? These ETFs can be used in a variety of ways in your investment portfolio. For example, you could use them to get exposure to a particular market or asset class, such as emerging markets or gold. You could also use them to balance out the risk in your portfolio by investing in both stocks and bonds. And if you're interested in a particular sector or theme, such as clean energy or robotics, there may be UCITS ETFs that focus on that area.
Statistical analysis of UCITS ETFs' own way to analyze UCITS ETFs is to look at their historical performance. By examining past returns and volatility, you can get a sense of how the ETF might perform in the future. You can also use statistical tools, such as regression analysis or factor models, to understand the sources of risk and return in the ETF. These tools can help you assess whether the ETF is a good fit for your investment objectives and risk tolerance. Another way to analyze UCITS ETFs is to use mathematical models, such as the Capital Asset Pricing Model, CAPM, or the Fama-French three-factor model. These models can help you estimate the expected returns of an ETF, given its level of risk. They can also help you understand the factors that drive the returns of the ETF, such as market risk, size risk, or value risk. By using these models, you can make informed decisions about which UCITS ETFs to invest in. Let's look at some examples of UCITS ETFs. One example is the iShares MSCI World UCITS ETF, which tracks the performance of large and mid-cap stocks in developed markets around the world. Another example is the Vanguard FTSE Emerging Markets UCITS ETF, which provides exposure to the stocks of companies in emerging markets. And a third example is the iShares Global Clean Energy UCITS ETF, which invests in companies involved in the production and distribution of clean energy.
In conclusion, investing in UCITS ETFs can be a great way to diversify your portfolio, lower your costs, and get exposure to a wide range of assets. By doing your research and using statistical and mathematical analysis, you can make informed decisions about